Hey, good morning, everyone. Sorry for coming in late. We had some technical issues. Our streaming software was down this morning, so it is now back up. Give me 1 second. I'm just telling everyone that we are online. Okay, good morning, everyone. Hello. Once again, I apologize for the delay. We had streaming software issues, and that was, causing me a delay to come on. But thankfully, we figured all that out, and we can get started. So I'm assuming you can hear my voice. You can see me, which is why all of you are saying good morning. And hopefully it will be a good morning because it started off a little rocky with my tech errors, but that's been solved. So what I want to do first is I want to go ahead and share my screen. Give me 1 second to do that. Share my entire screen. Okay. So right now, you should be seeing my screen, and what you should be seeing is the calendar. And let me just take off the banner so it's not as distracting right now. Okay, so as I said, right now we are looking at the calendar, and we're going to create a trading plan for today's live trading US inflation report. The US inflation report is typically one of the most important most market moving events for the US dollar. And typically it is one of those situations where we do see the dollar react quite a bit to it. But it could be different this time around. Before we get into that, let's take a look at what is expected. That is why you are seeing the calendar. Oops, I'm sorry. The calendar shows that the inflation measure is expected, CPI, which is this line over here, to grow pretty much at the same pace as the previous month, on a core basis, on a monthly basis. But where it could surprise to the upside, where economists think it's going to surprise to the upside, is on the year-over-year level. They think on a year-over-year basis, they think that we are going to see inflationary pressures actually increase to 2.6% from 2.4%. So the market is looking for, economists are looking for a hotter number. Now, if you've live traded with me in the past, you will know that economists are oftentimes wrong. They are wrong because it's very difficult to figure out what the exact precise number is. So oftentimes with non-farm payrolls, they were drastically wrong. With inflation, they're oftentimes wrong. And that is where the element of surprise is for us. That is where the opportunity is for us as traders. So we know that the market is, or economists are looking for a stronger number. And the stakes are kind of high, I have to say, because if you look at CME Fed Fund futures, and for those of you that just joining us, typically with trading event risk, what I like to do is we usually take this time before the number is released to create a trading plan, so that when the number comes out, we're able to react instantly to our trading plan. And now we're walking through the process of creating the trading plan on how to trade off of the CPI report. We don't trade before the release. We always trade after the release. So what you're looking at with me right now is what the market is pricing in for a Federal Reserve interest rate cut in December. Now, this is kind of surprising, right? And I'm showing you how to read this. Right now, rates are 4.5 to 4.75%. And the market is pricing in a 38% chance of no rate cut by the Federal Reserve in December. Just imagine that. The Fed cut interest rates in September, they cut interest rates in November, and markets pricing in an almost 40% chance of no rate cut in December, and a 60% chance of a 25 basis point rate cut. So this is quite different from a month ago. If you look down here, where we had 85% chance of a rate cut and 15% chance of no cut. So this could change a lot. So the stakes are high because the market is not convinced that the Federal Reserve will enter into a rate cut in December. Now I'm going to enter the trade pretty much right after the number is released. We're going to do, instant trading on the back of this report. So we see here that the market is, the bond market, the futures market is not pricing an interest rate cut. So there's a lot of room to the downside if we do get an interest rate cut from the Federal Reserve. Now, let's take a look at what is really the market pricing in this morning. So looking at what the market's pricing in this morning, taking a look at the upper right-hand corner, you can see the stock futures are up and bond yields are flat. And the dollar yen, as you see in my chart here, is fairly strong. Dollar is trading higher against dollar is trading higher against all of the major currencies. So FX traders are in sync with what economists are expecting. FX traders are in sync, and they do believe that FX traders are in sync with what they believe, with what economists believe. Now, let's talk about how much impact the inflation report has. Like I said, there's two things that the Federal Reserve looks at. One is inflation, one is jobs. Now, inflation is traditionally one of the most market moving, but there are a couple of things that can make it a little less market moving this time. Number one, the Fed has said the jobs report is more important, but take that with a grain of salt. I don't think that's the real reason why CPI is less important. The second reason is that the US election enthusiasm is still kind of captivating the market. And so the main outcome of the US election is pro-dollars, meaning that the market thinks that everything that's all the Trump policies is going to be pro-dollar. And that is why the dollar is so strong. If you joined me on Monday for our market outlook, I talked about how I'm bullish dollars this week, and that how even if we get a weaker inflation report, it will probably be bought. And the reason why even if we get a weaker inflation report, it may be bought is because even if inflation is lower, all of the things that Trump plans to do, from protectionism to tariffs to the resurrection of the trade wars, all of that is inflationary. And even the more spending by the Trump administration is inflationary. So even if today's inflation report is lower, traders may look past that to what's going to happen once Trump takes office, which is that inflation is probably going to be higher. So what are we trading? I'm trading forex. Boris is going to come in after I trade after the initial data release, and he's going to trade gold and indices. So that's, first of all, the trading schedule, the trading plan. We'll see what the CPI report comes out as in the price action before we actually see it almost immediately. I'm just putting up my tweet deck. We'll see it in the price action almost immediately. So before we talk about the currencies that we want to trade, what we want to look at what is the possible economic impact. So this is my Think Markets, this is my Think Capital account. And this is, one of our recommended CFD prop trading firms for CFD forex prop trading firms. And the reason why I like that is because they give you institutional tools completely free with your evaluation accounts. And what I like is the calendar. The calendar shows you the economic impact of data. So we go to the US, and you know how I love, fundamentals, trading news, and charts. So this shows you the US inflation rate. And if you click on volatility, you get the historical impact of the different currency pairs around these releases. So let's take a look at this. In Eurodollar, last month, 5 minutes after the release, you can see that we basically had a we basically had a 20 pip. We're going to look at the blue lines in the bottom, a 20 pip range in the Eurodollar in the first 5 minutes, a little bit less than that in August and September. 15 minutes later, the volatility and the ranges expand. 1 hour later, they're pretty much where they're at. So what this tells me is that Eurodollar may not have a huge reaction. What about dollar yen? Well, let's start 5 minutes after the report. Really nice chunky move. 40, 50 pips in the first 5 minutes in dollar yen. First 15 minutes gets a little bit more, not too much. And by the end of the hour, these look really small, but 60 pips, 86 pips, and 60 pips. So pretty good moves after the event. So if we want low volatility, Eurodollar is an option. If we want high volatility and big moves, dollar Swiss is the pair to, dollar yen is the pair to trade. I just want to look at dollar Swiss as well. Dollar Swiss, 15 pips, 20 pips, not too much. But the thing with that is that a lot of these pairs are a little bit more orderly. So dollar Swiss, we really don't get too much reaction. We probably get about somewhere between 20 to 30 pips. And I'm just going to check one more, which is one of the weakest currency pairs today, which is Aussie. So Aussie gets about 20 pips. This is at 20 pips in the bottom, 15 pips in the first 5 minutes, and then not much more continuation, and then not much more continuation 30 minutes after. So all of this tells me that we have two options. Option number one, if we want to be low volatility, then Eurodollar, Aussie dollar is probably, even dollar Swiss is probably the best bet to trade. But the real currency that is going to react is really dollar yen. Dollar yen, as 00007 says, it's probably going to be a pop and a drop and a snapback. So unless, of course, we have a really hot number, right? If we have a really hot number, we're just going to buy dollar yen, sell Eurodollar, or Aussie dollar. Those are the good trades. I'm just going to take a look at Aussie dollar 1 second. So Aussie dollar does have support at 65 cents, which is where these range lows are. Eurodollar, we're going to go to slightly longer term chart. It has support at 106. Dollar yen is really the one that has width to go on the upside and the downside. Now, there will also be whipsaw risk in dollar yen, of course. So dollar yen will be the most exciting currency pair to trade, but there's going to be whipsaw risk. So let's put together our trading plan. Let's say we have strong US CPI. Now, we have strong US CPI. That is going to be the clearest scenario because it's already consistent with what we're seeing in the markets right now. It's already consistent with the economist expectations. So we get strong CPI. I think that is just going to be pure buy dollar yen, and Eurodollar, which I'll talk about after I talk about this, is actually flashing zip sell signals. So that is why if it's a strong US CPI, we're going to be looking to do that. If it's a weak US CPI, we're going to be looking at selling dollar yen, and this is the high volatility trade. And then in terms of the currency pair, to it's going to be selling dollar yen, and I think selling dollar Swiss. I'm just going to check Kiwi dollar. Yeah. So that's basically the game plan. Now, Eurodollar could flip above the indicator line, which we also give it an option here. So I'm going to add one more here. All right. So these are the trades that we're looking at. Now, I said that I wanted to show you this. So for those of you that are unfamiliar, this is my zip indicator. And it basically simplifies trading. The background is red, meaning that the longer term trend is bearish. And when it's trading below the indicator line, it means that the shorter trend is bearish. And these are what I call buy and sell signals. So here's a sell signal right there. These are sell signals. Now, of course, when we have such a big event risk, you take the signals for a grain of salt, but they are telling me to sell right now. For those of you that are watching gold, I'm going to be trading FX initially. and Boris is going to be trading gold after we're done trading FX. Now, we do have to be aware of the pop of the drop and pop, as I like to call it, if we have a weaker number. So we do have to be aware of the drop and pop that could happen. So, we'll have to see how the data comes out. We'll probably take a trade instantly in the reaction of the data, and then maybe reverse it if we get like a reversal candle that gives us a direction the other way. So I'm going to set up my charts. This is the dollar yen, and we're just going to move this over here. This is euro dollar, and we're going to put dollar Swiss here. So we're only looking at these three instruments. And I don't want to put three charts on because I think it's going to be a little awkward. So we'll just leave that there. All right. We can put gold up, of course. Gold is bearish and it's in a downtrend. So if we get a positive number, it's going to be consistent with the candles and we should sell off. But as I said, Boris is the one that trades gold, and he'll be trading that and indices with you later. But we just to take a look at the gold chart because we have a minute. You can see here that gold, we're below a couple moving averages. Support is at 25.75, but really at 25.50. So I think that gold could end up, moving lower if we have a good number. If we have a weak number, though, that's obviously going to change things. Bitcoin continues to hold firm, 88,000 here in Bitcoin. I hope you joined my conversation on Monday. I talked about how Bitcoin could hit easily 120,000. Because when gold was introduced as a reserve currency, and this is what Trump wants to do, which is pass the Bitcoin Reserve Act. And if he passes the Bitcoin Reserve Act, that is going to drive gold. Even before he does, it's going to drive gold higher. Hold on a second. I'm just going to give instructions. So usually my stop is 20 target, 20 stop 20, target 20 on live CPI trades. So typically my stop is 20, my target is 20 on live CPI trades. We can talk more about Bitcoin later. It's time to trade US CPI. So let's see what we get here. I think the market is bracing for a slightly weaker report. So we do get a weaker report. We'll be jumping into the sell dollar Swiss trade and sell dollar yen. Let's see.
I'm going to try to call it out.
Okay.
In 3, 4, 2 seconds. 2.6 is expected.
All right. Sell dollar yen 154.60.
It's in line.
Is it? Is it in line? All right. Let's get out then.
3.3 forecast is 3.3. Actual is 0.2. Forecast.
Right, we're going to close the dollar yen trade then. I thought it was weaker, so it's in line. We're going to go. Oh, look, dollar Swiss is the one that's really moving. Let's give it a second. I think dollar Swiss, we're going to. So it's in line. Everything is in line. Even headline. Okay, let's see.
Yeah,
so headline is in line. Everything is in line.
Yeah, equities are ripping. We're up. All
right, so I'm going to buy euro dollar here at 106.49. See if we get a little bit of juice over there. I'm going to sell just because we are, moving upwards. It seems like even though it may be in line, it seems like the market wants to sell. I'm going to sell dollar Swiss at 88.04 and see if we get a little bit of downside. I don't think we'll have big moves, so we may flip the other way. We'll see. And I could be wrong. Dollar yen could be a buy here, 154.70. All right, I think let's give it a little bit. What are yields doing? Yields are falling, minus 1.1%. These aren't bad numbers, Let's give it a minute and see.
No, it's still high. I mean, it's still running 3.3 on a nominal basis, but I guess the market is relieved that it's contained, that it's not accelerating. There was fear here that there could be a re-acceleration, especially because the services sector kind of re-accelerated. And so far, we don't see it. I'm going to try and see if I can get the debrief on the numbers and come back to you with it in just 1 minute.
All right, we're just going to give it a minute and see. The numbers are good, but it seems like the price action's a little bit mixed. So I'm going to square up the euro dollar trade at 1.0634. So we lost 15 pips on it. It's fine. And I'm thinking with this, we're going to hang tight. Let's take a look at dollar yen for a second. We're going to look at dollar yen on the 5-minute chart and see if we've got any kind of retrace potential. I think we can. I mean, the numbers aren't bad. And I apologize for flipping back and forth, but I do think, okay, I do think this should be the right trade. I think we should sell euro dollar at 106.33. Stop 20. Target 20. Because it's still, floundering. And then I think we're going to, I'm not sure what to do with this against dollar yen because it's not, but I think that dollar yen, haven't really pulled the trigger on this, just still watching the price action here.
Yeah, just to go a little bit deeper into the report, for those of you who are interested, the core services X shelter was a little bit lower at 0.3 versus 0.5. And core CPI services X rent was 0.2 against 0.4. So again, that's sort of showing that rent is the only pressure on the CPI at this point, which is a relief to the market. That's why you're seeing equities kind of pop on a knee-jerk reaction. But gold also did a pop, but gold is definitely doing pop and drop right now. However, I'm going to be watching this because if gold holds above the 200-period SMA, I'm going to take a gander into the trade here. We need a signal in gold.
Right. I think dollar yen is, I can't really tell, but I think dollar yen is going to weaken. So this is where we're going to be sitting at. Let's see if it works out.
Are you watching yields come down or?
Yields had come down. Yeah. They're up a little bit, but the fact that dollar yen is not rallying, I think is bad news because you're seeing this rounded top on the 1-hour chart right here. You're already seeing a rounded top. Right. And now we're continuing to move lower on the rounded top here. Yeah. So we have 2 short dollar trades, one long dollar trade. But I think it's I think short dollars is really the right trade. Okay. So you can see now dollar yen, we're plus 10. I think that's the right trade. I think the right trade is
I think, guys, to let you know, as we get into our live session a little bit later, gold is really compressed around this 226.15 level. And it had a knee-jerk bump off the news. And now it's going to be really interesting to me because gold is one of those things where it's quivering. The data is relatively positive gold. So if we can't get a rally off this positive meaning that, you're not seeing accelerated inflation, therefore yields, chance of Fed cutting might be still on the table. Gold really needs to kind of accelerate its uptrend here. And it's doing that. I didn't just get a chance to pop into a trade here because Kay was trading. But
it's not doing anything. It's just kind of flat where it was, right? So
it's starting from the way we trade, it's starting to show a trend. So my point is that it's moving away from the 200-period SMA. I'll show you my charts in a little bit. Okay. And as long as it was staying above, we might be building a move into that 26-25 level. So
you're looking at possibly going long gold.
Yeah, exactly. I'm just saying right now it's holding the thesis that it's positive data, positive price action. But we need to watch this carefully right now.
All right. So I think we're gonna hold on to our trades. I think short dollar yen at 154.66, short dollar Swiss at 88.04. We'll see how those work out. Yields are continuing to move lower. Euro dollar, I think, is we'll just leave it on, as a bit of a hedge. and see which one. But I think that, the dollar is weakening. The data is mixed. It's not terrible, but I think the lack of inability for the dollar to rally is a sign that there could be some profit taking in the greenback.
Yeah, and that's my concern about gold as well, that it's had a very, very long rally. We had some profit taking for the last couple of days. So to really hold bid here, we have to hold that 200 period SMA. Once we start failing, it's probably going to be sell the news trade for a little bit. I don't think it's a massive sell-off, but we could still be in a corrective mode.
Yeah. So in terms of the short euro dollar trade, that's, as I said, we have flipped into that. It's the right trades are the ones that we said, the sell dollar yen and sell dollar Swiss. So yes, we should be closing euro dollar at 106.48. We had actually, the knee-jerk reaction in euro dollar was actually to go long euro dollar. But I got a little psyched out. But at least we look at dollar yen, 154.47, pretty much 20 pips, closing it there in dollar yen for the 20 pips here. Dollar yen target hit. So sometimes it takes a little bit of while to figure out where the price action is going to go because it's not very clear. But what we did here was, and we did go back and forth in euro dollar, but we stayed strong in dollar yen. And the reason for that is because US yields is really the direction. They remains low. They continue to move lower, and I think they will. So I think euro dollar will continue to move up. Euro dollar is an interesting. Let's see how the other ones, if any of them have flipped to the buy zone yet. No, not yet. The dollar CAD is selling off. Let's take a look at dollar CAD in a slightly longer term chart. I think dollar CAD could be an interesting pullback opportunity because it likes to trend a lot as well. But I think the short dollar trade is the right trade. I think euro dollar, let's see, euro dollar's got some resistance at the 106.60 range, but 106.50's got a lot of resistance above, but I think it could continue to move lower. I also like dollar CAD to the short side at I think it's deeply overbought. You can see, I think it's prime for a correction. And I think it's worth it to try to short this one. So let's try to short this one right here at 38. All right, so we made our pips, target hit in dollar yen, still hanging tight in dollar Swiss, and we're just going to watch this dollar CAD. The risk in dollar CAD is low because if it goes up to 58.60, the whole move would have been reversed. It definitely would have turned positive. I think dollar yen has more room to go on the downside in the near term. And so, I'm not going to reload, but, some of you guys may want to consider this. I'm trying to see if any of my other trades have entered the zip sell zone. Aussie yen is kind of interesting. The longer term trends. So I love the rejection of the 100-day SMA here, but it still looks like it doesn't really look that
just to let you guys know, I bought gold 26.16 right now for 26.18 target, 26.14 stop.
So you bought
very, very small.
16. All right.
Okay, can I speak, please? 26.16, 26.18, 26.14 stop. This is all in futures. I'll share with you my chart in a little bit. Again, just buying that dip into a positive trend. We're still above positive trend. And the 26.18 just hit for those of you who went into the trade. So
that's interesting. I guess my feed must be late because it says 26.11 in gold. But this is spot. Futures? It's not futures. No, this is spot. It's not futures.
Oh, sorry. I was quoting futures prices because we trade futures prices on here. So that's why it was different. But I'll show it to you guys on the chart. The important part is I'll show you the setups so you'll understand exactly my thought process. But basically, the bottom line is positive news on gold. I'm buying the dips as long as they stay above the 200 period SMA for a quick flip, and that's exactly what we did. I did this a couple of times already. Very, very small size because not a lot of high conviction trades right now because we're still afraid.
You want to show your chart because right now, we made our profits in dollar yen, took a little bit of hit in euro dollar. We're short dollar Swiss, short dollar CAD. Nothing's really moving, but I think we're going to hang tight on these trades.
Okay. So zooming in on my chart here, as you can see, let's take a look at gold as far as a classic example. It's actually giving us one more possible signal, but we've already made one signal, so I'll just leave this alone for right now. So here's a 200 period SMA. Here's the burst above the movement, creates a little bit of moving average separation. As long as we have moving average separation, that's our first and foremost filter for us wanting to trust the trend, right? So trend is positive, we have moving average separation. And then there's two ways to trade this. You can kind of buy the momentum move, which I did, which I don't really love. You know me, I don't buy momentum. I love to buy retraces. And this was a kind of a quick move over here that I bought 19 to 20.7. But the really good trade was this purple retrace candle, buying the dip over here, buying this down at 26.16 over here, right over here, and quickly giving it back at 26.18 for a +2 move. So, nice classic retrace trade. This is only the first. Usually we give ourselves 2 or 3 trend trades in the beginning of a trend. This is actually right now starting to formulate a pretty decent trend separation move. So we have like another retrace candle here. If this closes over here, next 30 seconds, we want to be buying this dip. Remember, we always want to be in a retrace mode. We want to be buying the dip in direction of the trend, right? So this is a reversal candle. As long as it kind of stays above trend here, it gives us a value entry, a really good value entry into a potential thing. Having said this, I am trading tiny because, again, very little conviction on this thing. I'm going to put myself into join bid here. Let's see if we can get in there. Maybe I won't give the trade. I am at, where's my bid? At 17.1. Okay, I'm at 17.1. We're going to try and get 20 ticks out of this thing as the trade goes by. Decent value buy on this trade. If it starts crashing, I'm just going to let this trade go. We're not going to double up. We're not going to triple up on this trade because it's going to break the moving average. So we're just going to let it go. We're just basically betting on the fact that, yes, this is yet another dip into a positive trend. But you can see the trend is not exactly super strong. I'm going to try and get myself a little bit closer to exit if we can get a move. But it worked on the first time. I knew it was going to be problematic on the second time, so we're going to leave it alone. This is not one of those type of trades that I want to fight because this is very easily could be a complete reversal of trend. And if it goes to the short side and resumes a short trend to the downside, I'll be happy to reverse my position with size at that point. So this trade looks like the dip just didn't work, which is fine. Again, this is tiny. Remember, my usual size is mini. This is a micro. So this is just pennies on a dollar, just to get my feet wet and to really see if this trend holds. Right. This is really the test of the positive data. Does the trend hold? And it's open question right now in gold. As we said, gold has been correcting, so any positive data may not be as helpful to it as it would have been if it was in a pure strong trend. All right, we're managing to stay alive for the next couple of seconds here. We'll see what it does. But again, looking at this price action, this is not healthy bullish price action, right? The healthy bullish price action would have been we have a moving average separation and we start building higher lows. We're not doing that. It just tells you that gold doesn't have much juice in it, which is fine. We have plenty of day to come back and trade this thing. This was as I said, pennies on a dollar. When we come back, we'll trade with larger size on this thing. Look at how utterly unproductive. Like I talked about this in my coaching session yesterday. Where is this thing? Here it is, rectangle. This is what, regardless whether you're a trend trader or a fade trader, regardless of whether you trade momentum, mean reversion, you never trade this. This is dead man walking zone. This is no money anywhere. You can't make money up. You can't make money down. You can't make money sideways. There is no continuation in any which way or form, whether you fade the highs or, buy the lows. There's just nothing going on over here. So when short moving average is compressed to the long moving average, when they're just like one moving average, this is avoid at all costs trade. And we're sort of, if you look at this, aside from the news, still sort of very much here. So we need some nice, clean directionality in prices. Now, conversely, if we look at S&P, there's actually nice, clean directionality over here, right?
There's no surprise because this is all pre-CPI price action. So it's no surprise that it's hugging the moving average in the, hour and a half before CPI.
Right. Exactly.
So it's, you never want to be trading ahead of it. So, I mean, what we do every day is not, at least what I do every day is not necessarily trade news. What I do, and I talk about this often, is that I trade twice a day. I trade at the New York Open and I trade at the Asia Open. And so we put on our trades for the New York Open at 6:30 a.m. New York time. And we put our trades on for the Asia Open. So the New York Open trades are 6:30 a.m. New York time. And the Asia session trades are at 8 p.m. New York time. And the reason for that is because momentum tends to be the strongest during those periods of the day. And that momentum tends to be, when we have Tokyo traders joining the market at 8 p.m., they take a look at what happens during the New York session. They react to it. They lead to continuation. And the New York session, same thing. New York traders come in at 6:30 a.m. They look at what happened during the European session, the Asia session, and then there's continuation. And so what we really do is we just trade zip. And we trade zip at the New York Open. We trade zip at the Asia Open. And the examples of trades, for example, this is a clear zip sell signal. Now we are forming that double zip sell signal. Someone questioned, how can you be long dollars and long euros at the same time? And, actually, if we stayed long dollars and stayed long euros, it could, we'll have to see. It could still end up being the right trade. But in reality, the trades that we take, for example, in zip, the trade that we took yesterday, which was during the New York Open yesterday, was, what did we trade in the New York Open yesterday? We basically traded Aussie, Swiss, Kiwi, CAD, and Eurodollar. Those were the trades. And the Eurodollar, we went short at 6:30 a.m. It wasn't a huge move, but it was enough because pretty much right around 6:30 a.m. we're trading at 106.28, and we went below 106, which is almost 30 pips. In Aussie, Swiss, we had, also double zip sell signals. Now, this is right at the Asia Open, and this is the London session. This here, you see zip buy signals, which is green background, green candle. But this is actually 3:00 p.m. New York time when no one's around. So that's why, knowing when to trade and knowing when not to trade is so important. So we come in the Asia session, we sell Aussie, Swiss, and we sell it again, during the New York session. It's a very nice smooth trend lower. And that's how we really try to apply our strategies during the right time of the day. A couple of days ago, we had sold Aussie yen. I had posted that. This was right at the Asia Open. You can see right around 9 p.m. New York time. And we're starting to fall through it. Wasn't a huge move, but it was a sufficient move. And right now we're zipping to the downside in Aussie yen as well. So, we're still waiting for a lot of our zip signals to close. This is not the time I would trade. Normally, with big event risk like this, we trade the next session, meaning that we trade the Asia session after the big data. So the real trades that we're going to put on is at the Asia session. But we have, I'm watching some potential zip signals, like Aussie yen potentially zipping to the downside, Euro yen not quite there yet. The reason why Aussie is so weak is because, we also have Australian labor market numbers coming out, as people are worried that the Australian labor market numbers could be softer. Eurozone obviously has its political crisis that everyone's watching. And so, dollar yen's kind of weak, Euro yen's kind of weak. We're not in the zip sell zone yet, but you can see here, when this trigger, none of these are during our active trading hours. None of these are during this 10 a.m., 5 a.m. Maybe this we could have caught a little bit of this. But when you can see that when we catch, when the market goes out of its range bound mode, here's a double zip buy signal. And we have a rally here, which is what I'm looking for in Eurodollar right now, which is the potential for a double zip sell signal. So the zips are usually used in combination with the time of the day, as well as what's going on in the markets in general. Let's see. Here's a beautiful zip sell signal in gold. Here, we don't get much of action, but here we have multiple. So you have zip sell signals in gold that preceded this huge move lower. This zip sell signal in gold worked. This is a zip variation, which means that the candle, the background turns red one candle after. So you can see it does pick up, and this is another zip variation. It does pick up even gold. It's a pretty powerful tool. So you can get zip and Boris's scalper indicators free with any 25,000 up evaluation with Think Capital, and you get 10% off with our discount code. So definitely take a look at that if you're interested and you're looking for a forex CFD prop firm to trade with. Think Capital is powered by Think Markets, a broker. And, they have all these really cool tools that you can use to trade, including the calendar that I showed you. And you can trade on TradingView directly for US traders. And you can trade on MT5 for the rest of the world, for those of you that like that.
Okay, so while Kay was talking, I repaired my gold trade. I want to show you exactly what I did so you can sort of understand the thesis behind it. Remember, we had positive trend. It kind of compressed down, and I said, "Oh, it looks like it's going to go down. I'm not. If it drops, I'm not going to chase it." However, after I got stopped out, we got a second buy signal here. You see, this is the first label of a signal. So that means it held the 200 SMA. So the next dip, which was right over here, I bought it. I bought it 17.2, and then at twice the size, meaning that I could wash away all these losses plus make profit. And then gave it up. I gave it up a little bit short. I should have bought, I should have sold it at 19.2, but it was still trying to prove to me that it's in an uptrend. Now it's starting to rebuild the uptrend and move it. But this is a good way to understand of exactly how we trade. There's three things that I do when I scalp. Number one, we always want some, whether we're trading with trend or with against trend, we want moving average separation in order to establish that there is a trend establishment, right? Number two, we're, at least from my perspective, I always buy retrace rather than momentum. I don't chase, I retrace, meaning that I'm always trying to buy value. I'm trying to buy dips in an uptrend, rips in a downtrend, and I'm always trading with small size so that if I'm wrong, I can always repair the trade on the next sequence or the sequence after that. So you have this triple technique combination, which is why we're able to constantly P&L so nicely during the day, because we're making sure that all these three things are in place in order for us to really play itself out. So this was just a classic example of this. Still trading incredibly small, and that's pretty much it.
Since I have so many of you on right now, I want to take this opportunity to talk a little bit about Bitcoin, which we talked about on Monday, which is that Bitcoin is at 89,000.
You want to show them on your chart? You want to take your chart, Kay?
I can. Just pull up a Bitcoin chart. I mean, I'm just talking about it theoretically. And a lot of people are asking whether or not Bitcoin can break. How far high can Bitcoin go? I don't know. Do you want to put up a Bitcoin chart?
Yeah, I can do that. Hang on. Do you what time frame do you want it at?
Daily. I just want to show the general price. And what I want to say is that, with the Trump administration and with Elon Musk having Trump's ear, there's a very good chance that we could see the Bitcoin Reserve Act passed. And what the Bitcoin Reserve Act means is that the U.S. government would be buying 5% of all Bitcoin out there, which is about 1 million Bitcoin. So when we just need to see we just look at current price for us. We don't need to look at anything else. So we're at 89,000 right now. When gold was added as a reserve currency in the U.S. under the Franklin Roosevelt regime in 1934, gold prices rose 69%. So if we just imagine 80,000 and a 69% increase, that basically puts us at 135,000 Bitcoin. But it'll probably go even more than that, because if the Bitcoin Reserve Act would not be passed until at least probably 6 months minimum into its term. And then that there's usually there's buildup, right? Usually there's speculation, build up, ramp up, and it exceeds that level. So I think that Bitcoin could easily go to 150,000, maybe even 200,000. But and so a lot of people are asking me about Bitcoin, and I think that we just need to look at how gold moved when it was added as a reserve currency in the US. And then when it was free floated, because then it was fixed, dollar and gold were fixed together at $38. And when it was free floated, it went from $38 to $800. So there's a lot of upside to Bitcoin.
So what is that?
And also, these things always go more than we can ever imagine, right? So that's another thing to pay attention to.
That's a 20x move, right? In gold, if you do it historical. So even if you do a 10x move in Bitcoin, that's an 800,000, peak value of Bitcoin. Right now, as Kathy's talking about it, the only thing that everybody's watching is the 100,000 as a start. What I was going to say, for now, that's the key thing. But long term, we absolutely could have a much longer move. I'm actually, by the way, the reason I was moving the chart around was because this is a daily chart. I didn't realize that the BFF, which is a scalping indicator. The thing that's very cool about price action, which I'm always surprised, is price action is fractal, meaning that the patterns that you see on the 1 minute chart are the exact same patterns that you see on the daily chart. And the same concepts that we use on scalping for 1 minute can absolutely be used on a much longer chart for those of you guys who are not degenerate gamblers like I am and everybody else in my room, and have much longer term time frames. Like, for example, here's a classic Bitcoin start of a trend. We get moving average separation. This is the first buy signal around here. This is the first buy dip signal. You buy this dip, beautiful trade on a daily chart. Boom. Second buy signal, third buy dip signal, fourth buy dip signal, fifth buy dip signal. So you have literally from the 31st of October till the 11th of January. Oh my God, that's like a lifetime for us in scalping land. Just a very, very positive move in Bitcoin that you would have been able to buy with virtually no drawdown whatsoever, using these, using the scalping signals. Same over here, same over here, same over here, which is really, really funny. And then eventually we start peaking, right? Which is another thing that we look for. Once we get to around 6 or 7 on the purple scale, those start, that's when we start looking to fade the move. And the critical thing we're looking to fade the move is we're looking for lower purple. So this 8 is lower than that 8. That's a great short. This 9 is either lower or equal. That's a pretty good short. This 9 is a lower than equal, and it comes in. So you could make money up. You can make money down on the daily charts just as easily as we do it on the 1 minute charts. Same indicator, because all prices are fractal, which is really, really cool. It's I never go beyond the 1 minute chart, so I never realize the power of this thing. But it's really fun to look at it at much longer term time frames, because K forces me sometimes to get off the 1 minute chart, and you can see how powerful the BFF indicator is, both as a scalping indicator, obviously, because we do this all day long, ever and forever. But if you want to get a feel for it, I'm putting in the link to a discount link to our access. You can get ZIP and BFF, and of course, reposition it any way you guys like it for your own use.
Yeah, you can also get it completely free and try it out for a month with a Think Capital 25,000 up prop trading account. Many of you have been asking, and many of you trade. Maybe kind of ask for us in a poll how many of you trade prop. And there's been a lot of prop firms that's blown up recently. So the only ones that we really like are the ones that are on the forex CFD space, or the ones that are powered by a broker, because we believe that they have their reputation at stake, they have their brand at stake, and so they're going to be much more careful about doing anything that could harm their brands, even if it's regulated elsewhere. So Think Capital is one of them, and they think, and that is why we usually recommend Think Capital, Axie Select if you want a different model for forex CFD prop, and then we're just evaluating another firm called DNA Markets, DNA Funded, which is provided by DNA Markets. So those are the firms that we prefer.
Okay.
All right. Any questions for me before I let Boris lead the live trading, gold and CFDs, and can let you focus on him?
Okay.
Dollar is continuing to drip lower. I think it remains the right trade. I think dollar yen is going to have a little bit deeper of a correction. And dollar Swiss is also kind of dripping lower. It may just take a lot of time, but dollar Swiss is right now comfortably in the sell zone. Not in the sell zone, but below the indicator line. We closed below the indicator line. This is the first time we're doing it, and since Friday. So I think we could have a little bit more continuation. I think it's the right direction. All right. Trading news is for fun, Fernando. What we really do, and the real strategy for me that hasn't had a losing month in 16 months is trading ZIP at the Asia Open and the New York Open specifically, and only during those times. Trading news is just for fun, to get you guys engaged with the markets.
Yeah, even I, who trade 100 times a day, really steer clear of the news, because the news is always very, very problematic. It's it's fun, but number one, the first thing you notice, by the way, about me trading news is size. I think that's such an important point to make, that whatever you're trading in news should be 1/10 your regular size, 1/10, because news is always unexpected and always dangerous, and you don't want to be fighting the market at large size. I'm perfectly happy to fight the market at small size, but you definitely don't want to be fighting the market at large size, because it's a very dangerous proposition in news. You don't want to be trapped.
I really like Dan's summary. Yes, dollar down stocks. I'm not sure, stocks are kind of wobbly right now, but it's dollar down, bonds down. And that's why the dollar's down. Gold, I'll let Boris add his opinion on that. And then stock futures are just kind of nowhere. For me, gold, low. We have higher highs, higher lows. So that's definitely more positive than negative. But I'll let Boris add his thoughts on gold.
Okay. All right. Let's grab my screen. Let's go to our regular. Let's go to the S&P 1 minute charts. I just thought it's cool though, right? Kind of looking at that daily chart, which we never travel on, and just seeing how the BFF scalper is so effective at entry points on trend, and even entry points on counter trend, even on the daily charts, right? It's just same principle. Markets are truly fractal. The same buying, selling patterns, the same wave patterns, which is basically, that's what we trade. We trade the wave. We surf the wave. Repeat themselves over and over and over again. It's kind of really, really interesting from that perspective. So where we stand on on stuff, let's take a look at. Let's just do a double chart here. See what gold is doing over here. So this is NAS. This is basically the news wave. News wave got retraced. Lower high here. I mean, a higher low. 2 is higher than 1. So you could have bought this. Same thing over here. I guess this 1 is higher than the 3. You could have bought this on a pure momentum basis. Not my trade. I just you are welcome to trade this yourself, and there are lots of people that like to trade pure trend. So buying highs, selling lows is absolutely their cup of tea. My thing is to buy dips, sell rips, either in trend or in counter trend. So if this thing, for example, right now, looking at the S&P, if I get a red candle, I'm sorry. Yeah, if I get a purple candle, because now it has to be a purple candle, not a red one, into the sell zone, I'll probably be a buyer here, because we're definitely held bid. We're above moving average. This area, by the way, yesterday was pretty much a big resist area. So if we get up here on the market open, or a little bit past market open, I'll be happy to sell it over here. So depending on where we are on the chart, I want to be a buyer or a seller of the highs on the moves. As far as gold goes, let me, you know what? Let me just do one more of these charts and put it on my other screen here. You guys don't see it. So I can just follow it a little bit. Hang on. And I'll watch the gold out of the corner of my eye. Gold still looks pretty good to me. On a positive bid. We made a little bit of money on gold here, and I should really try to trade more of it. So gold here, if you look at it, it's a mildly positive trade, right? We haven't really pulled away from the moving average. We're comfortably above it. One of the rules of thumb, by the way, that I like to use on all of these instruments. Where do I define, when does trend start? I said trend starts at moving average separation. Well, that's a nice description, but it's not really a mathematical recipe for analysis, right? And the mathematical recipe for analysis that we sort of the shorthand that we came up with is essentially 10 basis points of underlying. So what I'd like to see is the short-term moving average be at least 6 points higher than the long-term moving average. The short-term moving average in gold, which is like say $3, right? $3, because it's a $3,000 product, right? 10 basis points is $3, is got to be about $3 above. So this is 19 and this is 15, 16. That's pretty much consistent with us being in trend, right? That only once we get that, just like the airplane gets enough lift off the ground so it doesn't get pulled down, and it's in flying trend. I want to be in the flying trend. I don't want to be in the crashing trend. Kay and I have flown so much over the last month that I'm having PTSD of all this stuff. But it is actually a pretty good analogy of like how to understand buying trend, crashing trend. So we have enough liftoff here to kind of do this. And if I was paying attention, we're just doing other things. The classic trade for me would have been buy the dip, sell this, buy the dip, sell this, buy the dip, sell this. It would have been 3 easy scalps over here, all in the direction of the uptrend, but very very high precision trades. Just buy the 18s, sell the 20s, buy the 18s, sell the 20s a couple of times over, and it still pretty much stays the game. Now let's look at S&P. S&P is basically giving me. Let me come back here. Where's my S&P? I'm going to buy this on the move here. So I'm long the S&P here off this purple trade. Now, can it stuff me to the downside? Yes, but I'm essentially trading by the dip in a still what looks to be a reasonable uptrend, right? And I got I'm looking for 8 ticks on this. We'll see. Now we'll see if I get it. Where am I? And maybe we'll lower it to 6 ticks. Let's see if I can get the 6 ticks. It went up very fast against before me, and now it's kind of dying out. So maybe this trade is going to be a dying quail, which is fine. We'll wait for the next opportunity to present itself, because right now we're still essentially. I will say this though. I will say this. This is not as strong a setup as I'd like it to be. But it's post news, so it's all really messed up. The reason why it's not as strong as I'd like it to be is because the 2 is really below the 1, so it's truly not a strong uptrend. It's more like a corrective trend. It's probably more intelligent to have sold this down, and because it's telling you the way I want to be. You see how these 1, 2s, and 3s are all higher than each other. That they're sort of you're buying the dip in a rising trend. Here I'm buying the dip in a falling trend. So not a great trade. I'm probably gonna have to eat this trade. I rushed the trade because I wasn't watching it very carefully. All right, so we eat this trade. We're still very much in an uptrend, and I'm perfectly happy to fight this a couple of times to the downside. So I'll see if I can try to resolve this now on a dip now at the 12s. Now, it may puke all the way down to the 6,000. If it does, it does. At this point, my function here is just to basically see if I can, get myself resolved. Since I was wrong, and I'll fight it a little bit more if I have to. No, I'm getting myself into it. In the meantime, you see the gold trend is really starting to trade nicely. So, okay, I'm eating this trades. I'll have to be patient now for the next setup for me. This was a waste of time for us as far as trying to chip it. I got myself into a wrong setup and I tried to fight it a little bit. But again, I'm trading very small. None of this is hurting me. And this was just one of those kind of things where I just got clipped. Had I gotten just a little bit of better fill, it would have totally resolved to the upside. Bad execution on my part. Let's see what the NASDAQ is doing. So for now, you still have to give the benefit of the doubt to the upside, although the upside is clearly weakening here. We have, just sort of a rollover wave here, but we're holding the 200 SMA. So if we start rebuilding the uptrend, you have to give it the benefit of doubt to the upside. Okay, gold is having a nice, nice clean recovery back up. Gold is pretty much a nice strong trend. So the gold to me right now, the next dip in here will be a buy signal for me. I literally got clipped out at the low of this move, which happens sometimes. I'm watching gold here. I'm going to trade gold on a small size because I want to focus on the S&P. I want to try to resolve this S&P trade. So I don't want to get too bogged down. I'm going to try to buy the dip over here in gold on small size. So I am in gold on small size here. We'll see if this dip holds. Otherwise, it may be just falling down. We'll give it a shot. Gold could be double topping over here and just simply going straight down, which is fine. If it reverses, we'll reconfigure. That's why I took a very, very small trade on this one. But I'm much more interested in trying to figure out where the S&P is at this point, whether the S&P is going to rehold its upside bid or whether we kind of are a dying quail. I want to see the labels here. Gold's still like, really, really capped at this 25 level. And again, story of the gold has been that positive news has so far not really been positive price action as much as we want it to be. But we're still holding the benefit of the doubt still goes to the longs until we break the 200 SMA. Time is it? 17. We've got 13 minutes to the market open. Let's see what happens. I do think they're going to try to rip it to the upside on the market open. So I'd love to get it, get underneath there. But we'll see. I don't have any legitimate trade. I was fooling around with the idea of if it comes down here to be a buyer here on this move. But right now, we don't have any clean, clear price action on either side. All right, so the 3 label kind of shows us a modest uptrend here, right? So it's pretty much, it's equal, right? So go S&P sort of holding bid here to the upside. I can wait for the purple label to try to buy the dip, or anything that comes in red in here, I might want to buy the dip as well. Those of you who like to trade, trade momentum, you could just buy the 16, layer and hope that we trade back up to the 20s or 18s as a resolve. I'm going to try and buy this dip here in the S&P. I was trying to buy the 15s. Let's see if I can get it. I'm not getting it. I'm in at 15s. I'm in at 15s. Stop's going to be 13. Let's see if this mild positive trend holds. Come on. Come on. All right. So what the hell is this? Get out. All right. I'm out. So this was just, let me get out of Dodge for free trade, meaning, I made lots of tactical errors on these 2 trades, right? And my concern here isn't how much money I'm going to make. I just want to get back the money that I lost so that I'm back up to flat even, which is what I am. I'm back to flat even. And one of the great advantages of the way I trade is I don't need much to to get all my money back and start fresh on the day. I'm obviously I'm up on the day anyways, but I mean start fresh from the time I started with you guys, because since I was doubling, you can see I started with 1, I go to 2, I go to 4, right? Resolving all these 4s over here at these levels essentially washes away all these losses over here, kind of dumb losses over here. Now I'm essentially flat on the S&P. I'm still trading very, very small position on gold here. Clearly not doing anything, but it doesn't matter because this is dimes and nickels over here on gold, because I don't have any clean vibe on gold right now. And it's just a very, very important point that setup is really important. Indicators is really great. It does help you, but it in no way, shape, or form wins for you. What wins for you is size. Size always wins if you know how to manage it. Indicator just simply guides you. And I think that's kind of the most important thing I can teach you in all of my live trading is, you know, I'm going to be as wrong as anybody many, many times in my direction, but where I really want to be right as much as possible is in my sizing, because that's really what makes the difference between winning and losing. You know, it's capturing the profits when you have the size, and, you know, getting in front of direction as best as you can be. So hopefully that makes a lot of sense, or at least some sense. Good morning, guys. Good morning. So everybody's good. What are you guys trading? I'm still holding this this tiny little gold position on the assumption that we have we hold the uptrend, right? We kind of had lots and lots of moves through the whole thing. You know, honestly, I'm just going to try and move myself through here and just get myself out of this position. All right, so there we go. I took like 11 ticks out of this thing, only because I have no patience. You know, it was just dicking around, no patience. We'll come back to gold when we have a higher degree of confidence. Right now, it's just very, very choppy, and you know, we'll have to see if it wants to establish a trend. But the one thing I will say is I stayed true to the initial trend, right? I only want to fade trend. That means I only want to go counter trend when we're extremely, extremely stretched above the moving average. As I told you, my rule of thumb is I establish trend by about 10 basis point differential. So 6 points above this, we're still in trend. You know, you want to be playing that at around 20 to 30 basis points. So 18 to 20 point separation between the moving average and the short-term moving average. I want to be looking to sell. I want to be looking at opportunities to sell into the high move. So you use those heuristics. It really helps you establish what is trend and what is tradable, what is fadeable, or what is trendable, what is fadeable. See, S&P still kind of very, very weak. I'm going to get rid of all these. Let me get rid of all the trades executions, because it always looks like the St. Valentine's Day massacre on my charts because of so many trades that I do. So we'll make it nice and clean. We'll just watch the executions in real time. You don't need to see the history, but you get the idea of history. This is why I always like to show you, you know, the sizing algorithm, because you can see how sizing, you know, solves for a lot of, you know, a lot of wounds, right? Or what is that? Time heals all wounds. Sizing heals all bad trades. Is that the idea? Anyways. So I also want to put up right now, guys, the link to the trading account that I'm trading right now, which is Apex Funding. Always great guys. They are excellent at discounts. They're always discounting hard. As I told you, I am working the $250,000 account, $1,000 per day. I've been super busy with TraderFest, so have not. I was around plus 800 yesterday. I started the week at 250,000. I'm at 252,897. Right. So today is Wednesday. I guess it's pretty not bad. It's like it's almost 253. You know, I like to be 253, 500 today, but that all depends on whether I have time to trade as the day goes by. So look, S&P, right? Not looking too bad. Right, we're starting to get higher lows. Right, 4 is higher than 3. You see how nice and easy it is to see this contextually, sequentially on your charts. That's why labeling the entry points really makes it sense, because you can see, oh, this is the fourth entry in this particular signal. It's a higher low. It's an interesting trade. Blah blah blah, so on and so forth. Right. I mean, I'm hoping you guys really like this. That you like the new look and feel of it. So interesting. The group is half prop, half self trading. Nice to know. That's actually quite good. It used to be 2/3 self trading, 1/3 prop. So clearly, a lot more people are experimenting with prop, which is great. We love the prop business. If you want to trade for yourself, we absolutely love 8cap. That's our broker. right? So make sure you you open an account with them. You open an account with them, you get all my stuff for free. If you drop 5,000, you're going to get 6 months of me for free. If you drop 10,000, you will get a full year of everything we do, including all of Kathy's stuff, all the tools, indicators, everything for free. And of course, they're sponsoring Trader Fest, which is coming up this Saturday. Be sure to you can simply go to our live section of our channel and get a notification of when it's going to be. It's going to be an amazing product. Okay, gold. So gold actually went all the way to it resolved fully, right? I've been skeptical of gold, but if you sort of trust the methodology, it actually did completely prove itself. You know, buying here, we had a lot of heat, but then it did eventually resolve itself here. This one is a little bit lower than 2. 3 is a little bit lower than 2. It's why I'm not a lover of this one. You know, as a dip trade, I want to be buying them higher, not lower. And gold to me is still a little bit problematic. So we'll watch it. I'll turn super bullish on gold if we can clear this 24, 25 level and start turning back up for the day. Same thing with the S&P. S&P had a nice big wave, but now we're starting to come back down to the moving average. We got 90 seconds to the open. Let's see if the open is going to do anything. Let's take a look at NASDAQ also. My NASDAQ is really starting to fade out a little bit more, right? NASDAQ is doing the big wave, little wave back down to the moving average. So let's see. It feels a little heavy. I'll be honest with you. We've been so grossly overbought that any kind of news seems to be a knee-jerk move. Was it pop and drop? Right? We seem to be in a pop and drop environment with the decline. Yesterday I said to you guys, did I not say yesterday that we're going to test the 6,000? And did we not test the 6,000 yesterday? And then did we not bounce off the 6,000? I mean, it was just like in the afternoon, it was just money, taking money from the candy if you were traded this properly. I do think we might come back to test the 6,000. If we don't in the first half hour of the day, that's actually going to be pretty bullish. And you want to reorient yourself to the long side probably. But did I not say that? Who was in the room with me? Please confirm to me that I said that. Tell me I was right. All right, we got 10 seconds to the open. Let's see if they're gonna rip it. NASDAQ, they're actually dipping it. So let's see what they want to do. Market open, very little price action. I guess post CPI, nobody really cares. All the orders were flipped. All right, so we test the moving averages here. Very quiet open. Not a lot of activity on the open here. With NASDAQ considerably more pressured, I think, than the S&P. Interesting. But overall, honestly, 10 basis points, 11 basis points. Look at the yields. Holy shit. Is that right? The 2-year is down 2%. The 10-year, wow. These are big drops on the yields. Bond market's really not feeling the inflation vibe. All right, again, we're going to take a tiny NASDAQ trade. I'm taking the tiny NASDAQ trade on the bid here. On the bid, let me show you. More like so I took the bid here on NASDAQ because why? We held the bid. We had a positive candle over here, and I like to buy value here. This is I rushed it as usual. It's 25 seconds left. I rushed it way too much. Fuck. I'm gonna have to buy again. I didn't let the candle complete, thinking, okay, it's probably pretty good, but it looks like the candle is going to complete and take me out, which is fine. Because again, I'm small, I'm tiny on this, and I'll come back with size. I'll come back with size right now. All right, now I'm on 2 size. I need 20 ticks to resolve myself. and we'll see. We'll see if I want to keep punishing myself, but this was the proper entry over here, which I kind of made on my second attempt because I rushed my first attempt. And if that doesn't work, we'll come back and dip it again. Again, I can do this because I'm trading tiny, and I have the power of trading tiny. So I'm 26. And see, I not only made my money back, but made my full profit back. Now this was a tiny trade again. I should have traded this on a mini contract, but to be honest with you, I'm just not vibing it today. I'm so distracted with doing TradeFS and everything else that I'm trading small. It's just like when you're practicing tennis with super slow strokes. That's what I want to do. I'm not really hitting my strokes at full speed right now, but you're welcome to. And that's another really, really good trick. If you're just mentally not vibing stuff, and you're not zoned into the price action, there's no reason to trade your normal size. You can trade your 10th normal size, and get into the groove before you start doing it. So much of trading is as emotional as athletics is, as any kind of performative art. Trading is a performative art, just like acting is, just like athletics are, and any type of performative art. If you're not really feeling the emotion, it's much better to tone it down. To do smaller size, to practice the move slower, to rehearse it. With help, all that kind of stuff. So that was it. Anyways, that turned nicely. You guys saw the flip. Let me show. This was the. You want to see the history of execution, so you get a good idea. Basically, I come in with 1 because I'm too early. That gets stopped out. I come back with 2 over here, and it totally reverses itself up because the proper trade was to buy this dip. I love buying a dip in the inside the trend. Absolutely gives you the the proper situation. Now, should I be buying this dip? Am I vibing this thing? I was going to say, yeah, I should be, but I'm not. I didn't get the dip, so no. But like once you sort of get the rhythm, you can sort of see. I want to buy this, sell this, buy this, sell this. Within 10 minutes, you could be up $600-700 on very, very clean scalps if you follow the structure. All right, everything is super slow here, guys. Just like so boring. Look at gold. Gold gave back to 20. Gold is going right back to the 200 period SMA, which is why I was really, really skeptical. Gold now is starting to lose trend, right? Gold is starting to lose trend. That whole I actually remember I said to you guys, if it gets into the 24, 25s, I want to be a seller because of all that resist. I never got a chance to get in there, but that's where it was. Anyways, gold is hugging the long-term moving average. If we start going down to when is gold become an interesting sell proposition to me? Once it gets to the 226.12 level underneath here, that will be a full 3 points below the moving average. You're going to get decent moving average separation. That's when you have a potential for a downward trend in gold. NASDAQ is still. I'm not watching this. NASDAQ is okay. I'm buying the dip. Trying to buy the dip. All right, I bought this dip. This is like the third or the fourth dip in NASDAQ, again on the assumption that the trend kind of holding and playing itself out. If this thing starts puking down, I'll scale myself into and try to resolve the trade. This is still an uptrend, so I'll fight the market to the downside if it pukes its way down. But I bought the dip here, what I call the chase retrace trade, meaning that I'm not chasing a trade to the upside. I'm buying the dip to the downside and hoping I get value pricing, which I can then resolve. The way it's trading right now, it's like pulling teeth, man. It's more interesting to watch. What's like the most boring thing on TV? PBS documentaries. It's more interesting than watching. It's less interesting than watching PBS documentaries. Yeah. So, what do you think about yesterday's auction? Yesterday's auction was kind of a little shitty, right? The Bills really didn't get a cut. So we're going down a little bit. I'm actually going to watch this a little bit because I don't know how deep of a buy I really want to be. How much of a hero I want to be here on these moves here, because I think this might puke its way down to the support level. Gold like broke the level, right? I think Nasdaq is going to break the level too, right? If we look at Nasdaq is also going to break the level. Looks like everything is breaking trend to the downside. So I'm going to give myself a little breathing room and see if I can buy around the trend layer here. See, Nasdaq is starting to get a little bit pressure to the downside. We start moving to the 120 level. That's going to give us pretty strong clue that the downside pressure is going to persist for a little bit. Yeah, I wish you'd out. I should have bought this dip, but as you look at this chart, by the way, as I'm looking at this chart, what we should be looking at, this is interesting, is it's very indeterminate. But I was going to say, if you're like at the 3 level, right, the smart thing would have been to sell this candle over here. This was a lower 3 from 2, kind of a weak trend. I'm still actually tempted to, excuse me. I was just thinking that what I should have been doing is probably selling this in the 17s. Yeah, man. You can just tell I am really off my game here. Anyways, this is coming down. We are starting to get a little bit of a negative move. I'm going to try and see if I can sell the 15s over here. Not a great entry, but I'm just starting to vibe that maybe we get a negative move here. And again, I'm just resolving back to break even right now because my first instinct was wrong, and my second instinct is I'm not looking to win. I'm looking to just come back to break even and get into the rhythm, get back into the rhythm, start picking trades where I have a lot of conviction. Markets are also super flat, so there's very little conviction, anyways. And this is a good example of where you don't necessarily have to win on every trade. What you want to be doing is winning or scratching on every trade cycle, so that you can stay tight. Oh, excuse me. Sorry, guys. Winter in New York is going to be endless sneezing. And position yourself once you get some. A lot of times there's just simply nothing to do because the market is giving you nothing, right? It's just simply ranging in this very, very tight range, and all you're trying to do is survive the chop, which is what I'm basically trying to do right now, is just survive the chop, right? Now this is an interesting setup here, right? This to me, again, I'm gonna be doing this very, very small. If this thing goes green, I actually want to sell this because we had the market tested or tasted the bottom here, and this looks to me like a fake rally to the upside. So we'll see. I want to give it like all right. I'm in at 64s here. Again, also super small. And if it pops a little higher, again, I'm super small. I'll be happy to fight that out. Again, micros. I'm in at 72, and back, take that back with a modest amount of profit. I took about 14 ticks probably. Let me show you on the executions. So I sold. It's hard to see this. Jesus. I sold 64. I buy back at 74. Then I sell 2 at 72. And I buy them back at 69 to resolve myself. I actually thought, oh, this was a bad execution. Actually, I did not. It went all the way down to like 65. I should have bought the 65s, but it was bad execution. So this one barely broke even. Did not really make me money on this trade. But also, again, small trades because I was trying to just fade this move over here. Market is also, what I was saying to you, it's flat around the moving averages. When it's also flat around the short-term moving averages, it's also just chop city without any direction. And we have we really don't have an edge in here. So I'm forcing trades because I want to do trades with you guys, but there really aren't that many great setups right now. Although we have held the upside right now for the S&P, and actually are holding the upside for NASDAQ. So surprisingly, this is holding bid. Conversely, gold is now mildly below trend. Let's see if it turns away from the 200-period SMA and extends to the downside. If it does, if it gives us a red label somewhere around here, that'd be a pretty good signal of a short trend. Yeah, I'd love to make money, but the markets, you only make money when markets give you opportunity. Sometimes the best way to make money is just not to do anything, right? Sometimes it's just you want to preserve the money, right? Okay, so gold is coming down, to a negative trade. I'll do this with you guys. For those guys who like to trade momentum, I'll short. This thing stays low. I'll short this move here. If this is a big move, actually, 16 to 12. That's a big retrace move. But if it fights me back, I'll scale. I'll scale against it because this looks it looks to me like a down signal. I'll be happy to fight this to the short side. I think gold is a sell at this point. So I'm going to sell this right now. If I can get it at 13, maybe not. All right, I'm at 13. Here's the gold trade, and the target is going to be 11 with a stop at 15. And if it breaks through the 15, I'll get short more over there. But this is the first, more or less, trade. Now, again, this is a momentum. This is as I said, you selling the chase here. This is you selling the bottom, right? The better trade would have been if this purple thing goes up, to sell the top. You get a much better price entry. You get a value proposition. But I wanted to show you both, just so you guys can see the sequence. S&P basically chopping around the 17 level up and down, not really giving us any clues. So one of the reasons why I like to buy retraces, or why I like to buy dips, sell rips, is because I was watching, somebody had showed me this really interesting futures volume software piece, and I forgot what it was called. I think it's called heat map or something. And one of the things that it shows is the size of the volume at a given level. And inevitably, what you see when it's plotted against price is that there are these massive, huge bubbles at the peaks and the troughs, meaning that volume spikes at the lows. It's sort of like, it hits a huge volume and that's a low, huge volume and that's a high. That's why, like if you're sort of, buying, not that buying a dip here would have been a good idea, but, buying the spike over here would have been a good idea, because volumes, volumes coincide with spikes, like it coincides with peaks or troughs, and those are usually much better entries. Typically, price isn't going to continue after a huge volume move. You get a huge volume move, and that price retraces, and then it continues. It needs to digest that volume. So when you kind of understand that, that's why I'm much more of a retrace trader. Like, had I sold over here at the 14s, would have already been we've already made our money. Now we have to fight all of that momentum retrace against us, but at least it's holding. All right, we'll take it over here. This is my, as I said, I don't need the perfect to be the enemy of the good. I'm not a retrade. I'm not a momentum trader, so I'll take half my loaf instead of full loaf. But hey, you've been, you taken this trade, you may have gotten the full 2 points if you did that. In the meantime, S&P finally giving way, right? Like finally starting moving away from this listless range of 16. Let's watch that. Let's see what's going to happen. I want to be, irrespective of what my indicator is doing, I want to be a buyer at least on the first pass of the 6,000. If it drops below 6,000, I think there's a reasonable chance it's going to bounce back up underneath there. The moving average here is 607, so it's actually a way away from 6,000. We're going to have to establish a negative trend here. By the way, you see how this eventually did hit. Anybody take the short gold trade and Bookmap, right? Bookmap. How many screens do I have up? I have, like right now, I'm working on 3 screens. I'm working on 3 screens. Who took the? Can I talk about the CFD prop challenge? The link is there, my friend. There's nothing, it's a simple. Well, look at this. Like, see, I told you gold is getting heavy, right? My directional instincts are generally always better than my scalping execution, right? That's always the case, right? I'm always directionally, generally pretty good in figuring out where things are going to go. So for those of you guys who are swing trading, you can always trade my my opinion, since I don't trade my own opinion. The terms are on the Think Capital page, guys. It's very simple. I don't need to describe it to you, because if you're interested, just simply go there, look at it. They're very, very clean, clear terms. We've had lots of people who've tried it. Their execution is excellent. I like them. I'm actually going to have a super cool tool for anybody who trades MetaTrader 5, MetaTrader 4. I'm going to have a super cool tool that I'm going to be giving away at Trader Fest for execution. That's going to do a million different things for you guys that you're going to love. So absolutely, it's another reason to come to Trader Fest. Yes. So Gordon took the gold. Anybody else took the gold, the short gold trade with me? Yes. No. All right, I'm finally feeling a little bit looser in my haziness. So hopefully we'll get good vision on the trades. .007 took it. 0007 loves the momentum trades. Jesus Christ, look at this. Could this be a little bit more boring? Oh my God. NASDAQ is not much better. NASDAQ is putzing around. All right, should we take the NASDAQ momentum trade? I can't say I love it, but you know, what the hell? Let's go again, small size, because I have zero patience for this right now. 17, join ask. I want to wait till about 5 seconds left just to make sure that this thing isn't going to retrace all the way up to a non-trade for me. Ah, shit, I think I missed it. Ah, I missed it. Damn it. Okay, I'm in. Where's my negative? I'm in at 37. It's a big momentum move, 15, 16 ticks, 20. Oh, look at that. That actually worked. So the momentum trade, worked nicely. Everybody give yourself a hand for all you momentum traders. Gold is clearly starting to show you a negative trend. Now, this is exactly how I want to be looking at a pattern. So we are 16 to around 10. That's already full 10 basis point separation, nice clean separation. We're going to assume that at least for the next half hour, maybe if we're lucky for the next hour and a half, we're in a downtrend, which means that there'll be some clean sell signals. And if we stretch out, and stretching out here is, by the way, underneath the 2600 level, I'm definitely going to be a buyer, because then it's going to stretch out 20 basis points, 30 basis points away from the moving average. And, I want to be a dip buyer at that point. NASDAQ dumps and jumps. That's a new saying, dump and jump, right? That's what NASDAQ does all the time. And the S&P just simply holding, not really coming down underneath that. I mean, we tested the 605s, but we really have not come down to the 6,000. I still think we're going to come down to the 6,000. We're just over, just feels like we're over. But look at the German. Holy cow. Who's trading? German is down. I mean, German is definitely draggy on the US indices. Why is the German down so much? What the fuck? German really, really is down. By the way, sort of like if you did it the 149, well, this one would have ripped you. This you had no, this is why NASDAQ is such a tough trade. So how would I have traded NASDAQ on a sell the rip basis? This is the purple, right? You get short 49. I got ripped right away. I would have gone twice the size over here at the 160 level. It would have resolved very, very quickly. The danger of that, and this is why I always, caution people on NASDAQ. The NASDAQ can do a V-shaped recovery where it's just, going to go down and then come back up over here. And then you might have to fight it 2 or 3 times before it finally gives way to a retrace. So you always have to trade it very, very small against your capital base. And if it shows up a second purple label here, again, not a perfect label because it's going to be a higher low. You want it to be lower low on the selling basis. So you just have to be very mindful of V-shaped moves in NASDAQ. But eventually, when you get it, it's beautiful. You can totally sell the highs on the NASDAQ in a downtrend, buy the lows in NASDAQ on the uptrend. You just have to give yourself more than one chance because it's notorious for stopping you out. Yep, gold is going down, like I said. Yeah, Adam says the triple top on the dollar index is not good news for gold. Probably true, but still going to be a short term buy at the 2600 level as a dip trade. All right, are we finally going to get a negative trend here? Nasdaq barely dips into negative territory. S&P still fighting it. We'll see. This was a really, really annoyingly indeterminate trade, right? Because you had these higher purple labels, which sort of really faked you out. Because if they were lower purple labels, you could have sold the greens with impunity. You could have sold the greens with impunity anyways, but they just, they were giving you fake signals in a way, right? This was like after the third label here, this was the only one that was kind of a legitimate signal. You would have sold the 17.25, easily taking it back down at 15. But the 4 was kind of higher. The next one, these were all consecutive highs, so you would have been dubious about taking this one, but this one would have worked so well if you faded this move. And gold pops, guys. You guys were all like, oh no, gold doesn't pop. I thought I misinterpreted. So 609. So if you sold the 9s over here, you had some heat, but looks like now it's coming back down. I mean, if you sold the retrace trade, I'm not watching gold, so I missed that trade. What do the numbers and triangles represent? How many times it did it after the cross the 200 period SMA? Yes. Yes. It's how many times it does it around the 8 period SMA, but it's since the 8 period breaks the 200. So effectively since the 200 break, yes. Yeah, second signal in gold here right now. You're right. I should have. My trade would have been here at 095. So now I'm really and it would have been done here. I just missed that trade because I was talking to you guys, but it really doesn't. The important part is you guys get to see the setup. Here's the link to our tools. Here's the link to my coaching if you guys need it. Here's the link to Apex. And here's the link to Think. Oops. And here's a link to ACAP. Think I got enough links in here? I think so. Okay. S&P looks like it really wants to break the lows here. That gold trade would have totally worked for you guys if you took it. Good job on you on the momentum trade. Nasdaq dipping below, I think, again. Now Nasdaq is coming down to the 100 level, which I really like. So now Nasdaq is really starting to expand its moving averages. Now maybe we're going to get, was it 10 o'clock? Maybe we get that 10 to 10:30 actual trend move. That'd be awesome. If this thing pops to a green label, I want to be short this S&P. Because this is a lower 5. This 5 is lower than this 5. And if I get a green candle, I want to be short that green candle. I don't know if I'm going to get it though. I want to get myself ready for gold 2600. It'll probably be like the third or the fourth label over here, so we might have some really interesting trades here. So let's watch S&P and gold. What do I want to do in the S&P right now? I want to buy the 6,000 just purely on a psychological basis if it comes down there. If it pops and gives me like a number 6 buy label over here, I might be a seller here. The only thing that really holds me back is that this could be the beginning of a fresh wave up. When waves will come down to support and then rebuild and start building back up. So, I'm hesitant to want to sell it over here. I'd rather get short once it establishes a downtrend, but I'll give it a shot. And gold, I'm looking for it to, kind of fall through the 2,600 for them to pressure it all the way down. Let's see if we can get some trends going. See what people are saying on Twitter. I'm not going to bother. I'm going to go on Twitter here off the other chart, so you guys don't we don't miss trades. We don't miss levels. As I'm wanting to do, I always miss levels because I'm looking at other stuff. So Bitcoin goes 90. Everybody's long Bitcoin because of Trump. Oh, so now you can. This is funny. Now instead of betting on Bitcoin, you can bet on whether Bitcoin will rise, which I love. Polymarket has got will Bitcoin hit 100,000? That's funny. All right, we're getting down through the 6,000s. NASDAQ kind of holding around 100. NASDAQ at 21,100 below that level. If I get, and so kind of to get you in the right mindset of my negative thinking strategy, buying the dip strategy. Let's go to NASDAQ. I'm going to show you. So NASDAQ is still very early, so I really don't have crap here, but as soon as I get like 2 or 3 labels, right? 2 or 3 negative labels, so trend labels to the downside. The third or the fourth, assuming I have lots and lots of moving average separation, so the long one will be 21,150, and maybe the lower one will be 21,050. Then I want to be buying the selling dip. The sell label that low, I want to be buying because I have a really high confidence it's going to bounce back. But I'm far away from that scenario just yet. I got nothing. And the more probable scenario that I'm waiting for is for gold, which is already established a nice clean downside trend. Maybe gives us another third label to the downside, falling like a swan dive. I want to be a buyer underneath the 2,600 just purely on a psychological basis, because I think the buyers will come in between 96 and 2,600. There'll be some buyers that'll come in. Oh, and look at S&P coming down through the 6,000. So we are starting to accelerate the downside trades. It's kind of cool to watch this on charts, right? It's kind of cool to watch the price action develop the wave action. And once you kind of understand that wave action, it becomes so easy to read the charts in a trending environment. At 6,100. All right, where am I here? All right, I am in. It's going to drop like a stone. I want to take a probative trade in front of this thing, and I took a little bit early. All right, now we're going to get larger underneath here. Oops. Okay, I'm in at 98 on size here. Let's see if I can get to 6,000, but it's probably likely going to go to 96 before I have to really do this. So this isn't a scalp trade. This is just me fooling around with levels. Oh, what's going on over here? Oh, exit. Okay, now I'm at 93. Now I have some nice size I can work with. Okay, great. Okay, now I'm in it. My entry was at 91. No, 93. I'm looking for 95. Let's see if I can get that move. And if it doesn't, I'll get a little larger beyond there. 95. There we go. And that was a nice resolution for for that trade. I started a little too early, as I knew I would. In the meantime, let's turn attention to gold, because now I really want to get long gold on size. Okay, join bid at 26. All right, I'm in at 26. If it drops again, I'll be buying at 98, and I'll be buying at 96, because again, I like those levels as near term knee jerk support levels. All right, you know what? I took the 16 ticks on gold because it was close enough. That was a good trade, in a sense that really played that correctly. This was a poor trade. It was a good trade in the end, in the sense that I made I made those trades out, but it took me three tries, as a big bounce. Now, what's interesting is now we're pretty seriously negative trend. So as we start bouncing up, and we start, like if I get a green candle through the moving average, I want to be short this thing. It's a little early for me to be short with gold, because it's only the second purple label, and this is where it gets a little bit interpretive, because generally I like to only start, no, I'm sorry, it's not early to me to be short gold. It's a little bit early for me to be long gold, so this is actually fine. I want to be selling this. So it's 604. Let me see if I can do this. All right, I'm in at what am I in at? 4.2. Stop is 6.2, and target is 2.2. If this thing spikes again, I'm happy to get more short, because I think gold is going to be a natural sell here. Oh, look at the S&P pop. All right, I'm going to be happy to fight gold here. So I'm going to be happy to fight gold here for a little while. See if I can get in there. Just missed me. Man, that sucks. Just missed me. That sucked. It ran through my level and just did not execute me. That sucks. And now it dies. I just the nature of the beast. I should have been ready right away. I wasn't ready. I'm sorry, guys. Damn it. All right, so we ate this this trade. This trade would have resolved into a nice positive trade, but we ate it. So now we have a 3 sell label. And I'm just gonna have to be patient and wait for for another opportunity here for me. So because I don't trade momentum labels. I want to trade retrace trades. 16 to 3. It's got a pretty strong mean reversion move here. So it's got a lot of, like, so much separation now that I actually want to be a buyer of this on a dip. And the idea here is, okay, we tested the 600 level, the 599 was support. Now we're coming in for a sell. I'm going to make the assumption that it's a double bottom. If it isn't, and it breaks, further to the downside, fine. I'll fight it the other way. But let me just put my bid in here right now, so I can see if I can get done. All right, I'm in at 601. Let's see if that works. And prepare myself so I'm not like late on any kind of trade. So again, the idea is I'm going to play the assumption that this double bottom holds. Maybe they're going to blow me through here. Maybe this was the dip buy that's good. So this is my first established trade on this level, looking to get out at 6035. Because we already moved quite deeply below the moving averages. The separation is really, really wide, and I'm just basically trading the bounce back trade, and the idea that maybe the 2600 is going to attract some buyers, at least for the near term, as the trade plays out. All right, I'm out. I'm out on this trade. And if you have a George Costanza personality, meaning that you want to do the exact opposite of what makes perfect sense, then that is the perfect scalping mindset, at least for me. What I mean by that is, everybody's looking at this and like, oh, gold is going down, dollar's going down, everything is going down. And the answer is yes, true, especially in the first two sequences. Sometimes the third sequence is true too. But if you understand how the mentality of the markets worked in the very ultra near term, you understand this was peak selling, right? And all the retail sold. They sold to market makers. Market makers have to make their money. They make their money one tick at a time. I buy from you, I sell higher one tick later. So in this particular moment, in this particular time, given the fact that there was support, a little bit of a bounce back from the 2600, given the fact that there was lots of moving average expansion, so much so that the rubber band had to come back a little bit to its natural state, given the fact that I can buy the absolute low tick here, so I have lots of cushion here, the trade was to the other side. That's just how I view the markets. That's how I feel comfortable making those trades. But there's a couple of things here that are really important that I want to just emphasize. I don't take a bottom fishing trade when the moving averages are right next to each other, because there's no edge. There's prices are flat. They can totally go one way or the other. Here they've already gone one way. In other words, I'm trading very much near-term history, right? Which means that everybody who's puked their position has already done so. So I'm assuming, at least in the near term, there isn't much more puking to do, which means the natural trade is to the other side, because everybody who's sold over here is going to get short squeezed as the price goes against them, right? That's the difference between chase and retrace in the approach and methodology. But it doesn't, there are plenty of days where just selling in a continuous trend works really, really well. It's just most of the time the trends don't have that duration. They have some continuation, but they don't have duration. So to get a really for truly strong chase trades to work, you need both duration and continuation, meaning the trend has to go for like the next hour and a half to the downside, and that doesn't happen a lot. So just wanted to to lay that out there for you guys as a thought pattern. All right. This is a fun session. I did take myself up to 253 after, just stumbling around a little bit. And hope you guys really had a lot of fun. Oh, wow. Enzo says he took 14 trades using Scalper. 13 of them were winners. One was a loser. Good for you. You got to tell us how you do that, Enzo, since I'm clearly not a 14-1 trader. Dr. D says, great trading day. Only need another $500 to qualify his $150,000. Awesome. So 150K to 100K. Very, very nice. That's what I'm talking about. I absolutely, think that using this with just starting one contract, maybe two contracts on the S&P, it's very reasonable. It's not like, it's completely not out of the realm possibility to do 1,000 a day on this thing, right? You're looking only for 5 winning trades, net winning trades to make, because it's $200 a trade, and you still have that $6,500 budget. You still have 27 contracts in your arsenal. You just have a lot of leeway with a $250,000 account, which is what I love to trade on this particular strategy. Or you could do the exact same thing on a $50,000 account, but you're starting with micros. Wherever you do it, it's a pretty consistent path to funding, and then the much more important part, it's a much more consistent path to payout, because you're trading so tight with such good risk control that your drawdown levels are nowhere near the stop out levels. That's really the key, right? Really the key. Look at did I tell you that it was that it was going to go like 96? I mean, this was a crazy bounce, but like you could tell, this was I just wish I didn't butcher this trade as badly as I did. I would have been even up higher, but you can see that the trade worked. Now we got to see if, maybe we're just going to twiddle our thumbs around. Frankly, it could be just we may be entering that whole bullshit pre-holiday period where nothing happens. But I was going to say, if we start expanding back down to the 93s, 98s, maybe we begin to have more of a meaningful downtrend in the S&P. So we'll watch that. Anyways, plenty more opportunities to go in the next couple of hours. I hope you guys really enjoyed it. I want to thank everybody again for hanging out with me. Thank everybody hanging out with Kay. Another fun session. I will put together a session tomorrow. Yes, I haven't put up the link in there, but I will put the link up there. So we'll trade normally, for the session tomorrow. And everybody come to Trader Fest. Everybody have a wonderful time. All right. Thank you, guys. Tuned in for the first time to see how you guys roll. So what do you think, Lee? How do you like the way we roll? Do you like the way I roll? Is it a little too insane? Thanks, Enzo. Enzo, you're doing a great job, man. You love it. Yeah, it's a lot of fun. Listen, if you love to trade, you trade with me. We're the all-you-can-eat buffet of trading. There is never a stoppage of trades. There's never a shortage of trades with Boris, right? I do not skimp on trades. Jews do not underfeed, and Jews do not undertrade. That's the motto, both of our eating habits and our trading habits. So I think I'm going to put that on my motto: Jews do not underfeed and Jews do not undertrade. That's the fun part of trading with me. All right, guys. Everybody have a wonderful day. I will see you. I will see you guys tomorrow. Everybody enjoy. Take care.